Hey everyone, and welcome to the first episode of Safe, Simple, Sound Podcast Insurance Planning Edition podcast, the show where we make managing your money feel a little less complicated and a lot more empowering. I'm your host, Alex. Today, we are tackling a cornerstone of any solid financial house, a topic that can sometimes feel big and intimidating, but is absolutely essential for peace of mind: insurance planning. Our discussion is based on a foundational article from our own library at safesimplesound.com called The Ultimate Safety Net: An Introduction to Insurance Planning. The article does a fantastic job of reframing our whole perspective on this topic. It introduces two really powerful ideas that I want to share. First, it asks us to think of insurance not as just another monthly bill, but as a personal shield, a protective shell like our mascot, Shelby the tortoise, that guards our families. Second, it reveals that the concept of sharing risk isn't some modern corporate invention. It's an ancient idea, practiced by traders and communities for thousands of years. So if you're just starting your financial journey, maybe you're planning for a family, or you just want a clear, simple explanation of this crucial topic, you are in the right place. Let's get started. Honestly, one of the most misunderstood topics in finance is insurance planning. I know. Just hearing the word insurance can make some people's eyes glaze over. It can feel complicated, expensive, and maybe even a little morbid. But I want to challenge that perspective today. Because what if we stopped thinking about insurance as just another bill to pay? What if we started seeing it for what it truly is? We need to redefine insurance. It's not a product. It's your personal financial safety net. Think of it like a shield. It's a shield you hold up to protect yourself and the people you love most from the financial fallout of those big, scary, unexpected life events. I want you to pause for a second and think about this. How does reframing insurance from a monthly expense to a shield of protection change your perspective on its value? For me, it shifted everything. It went from being a line item in my budget that I resented to a proactive choice I was making for my family's security. And that feeling of security, that's priceless. This shift in mindset is the key to understanding seizing financial control. So much of financial stress comes from feeling like we're just reacting to things that happen to us. The car breaks down, the water heater bursts, a medical bill shows up unexpectedly. We're always playing defense. Building a financial safety net is about choosing to play offense. It's the difference between waiting for a storm to hit and then frantically trying to board up the windows versus having a solid, reinforced roof already in place. It's about looking at the road ahead and proactively planning for the potential bumps, instead of being thrown from your seat when you hit one. So let me ask you, when you think about your financial future, what are the biggest what-ifs that cause you concern? Is it getting sick, an accident, losing your job? Naming those fears is the first step to building a plan to protect against them. Now, building this protection doesn't have to be a frantic sprint. In fact, that's the opposite of our philosophy here. At Safe, Simple, Sound, we believe in the model of our mascot, Shelby the trustworthy tortoise. Think about it. Shelby moves with purpose. She's not flashy, she's not reckless. She carries her protection with her everywhere she goes, a sturdy shell built slowly, steadily, and strongly. That's exactly how we should approach building our financial security. It's a safe, simple, and sound process. It's not about taking huge risks. It's about making smart, deliberate choices over time to build a protective shell around your financial life. If you think about your financial life as a house you're building, your savings are the furniture, your investments are the art on the walls, your retirement account is that beautiful view out the window, then what is insurance? Insurance is the foundation. It's the solid, concrete cornerstone that the entire structure rests on. You wouldn't build your dream house on a foundation of sand, right? In the same way, all those other financial goals, saving for college, investing for the future, planning a comfortable retirement, are incredibly vulnerable if you haven't first laid the foundation of protection. Insurance is what ensures that one single event, one crack in the wall, doesn't bring the whole house down. It provides the most essential element of all: peace of mind. So, to recap, we've talked about reframing insurance as a financial safety net, a shield, not just an expense. We've talked about how this allows you to seize financial control by planning proactively. We've embraced our inner tortoise, following the safe, simple, and sound path. And we've established insurance as the fundamental cornerstone of your entire financial house. Now, I want to leave you with a small, simple action item. This isn't about buying anything or making huge decisions today. It's about taking the first step. Your call to action for this segment is this: take 5 minutes. That's it, just 5. And grab a piece of paper or open a note on your phone. I want you to make a simple list of the people, the assets, and the income in your life that are most important for you to protect. Who relies on you? What do you own that would be devastating to lose? What income keeps your financial house running? Just write it down. This simple act of naming what matters most is the real starting point of any good insurance planning. Now that we've laid the groundwork for what a financial safety net is and why it's so crucial, you might be thinking this is all a very modern, complex invention. But you'd be surprised. The idea of sharing risk to protect one another is a concept that's nearly as old as civilization itself. What if I told you that this idea, the core concept of insurance planning, isn't modern at all? What if I told you it's an ancient human tradition, as old as trade and community itself? We're going on a little time-traveling adventure. We're going to explore the surprising history of insurance, from ancient trading routes to the cobblestone streets of colonial America. Because understanding where this idea comes from can completely change how you feel about it. This is, in a way, insurance for beginners, starting right at the beginning. So let's start thousands of years ago. Picture this. You're a Chinese merchant on the Yangtze River. Your entire livelihood is tied up in a single boat filled with precious silk. If that one boat hits a rock and sinks, you're ruined. It's a devastating all-or-nothing risk. So what did they do? They got together with other merchants and decided to divide their cargo among several ships. Each merchant would place a portion of their goods on each boat. That way, if one ship went down, everyone lost a little bit, but nobody lost everything. It was the very first brilliant example of shared risk. And it wasn't just them. In ancient Babylon, traders created something called bottomry contracts. It was essentially a loan given to a merchant for a voyage. But here's the genius part. If the shipment was lost at sea, the loan didn't have to be repaid. The lender was taking on the risk in exchange for a higher rate of return if the voyage succeeded. These ancient methods established the absolute, timeless principle that is still at the heart of what is insurance today. The community can absorb a financial shock that would be devastating to just one person. It's the idea that we are, quite literally, stronger together. It's like if a storm knocks a tree onto your neighbor's car. For them, a $2,000 repair bill might be a catastrophe. But if everyone on the block chipped in just $50, the problem gets solved without sinking anyone's budget. That, right there, is fundamentally how insurance works. So this brings up a question I want you to think about for a second. How does knowing that risk sharing is an ancient human concept, not just a modern corporate product, affect how you view insurance? For me, it reframes it from a cold transaction to a form of community cooperation. Now, let's fast forward a bit. For centuries, these ideas bubbled up in different forms, mostly around shipping. But the real catalyst for the insurance we know today was a disaster. In 1666, a small fire started in a bakery on Pudding Lane in London. That spark turned into the Great Fire of London, a blaze that raged for 4 days and destroyed over 13,000 homes. The city was devastated. Out of those ashes rose the urgent, undeniable need for a more formal way to protect property. People realized they couldn't just rely on luck anymore. Within years, the first fire insurance companies were born, offering people a way to rebuild if disaster struck again. And this really makes you think, right? Can we see parallels between historical disasters shaping insurance and modern events that highlight our need for protection today? Every time we see a community grapple with a hurricane, a wildfire, or a flood on the news, we're seeing a modern version of the Great Fire of London, a powerful reminder of why having a plan in place is so critical. Finally, let's bring the story to our own shores. In colonial America, who do you think was one of the biggest champions for this idea? None other than Benjamin Franklin. He wasn't just a founding father, he was a community builder. In 1752, he co founded the first successful fire insurance company in America. He saw it not as a business, but as a tool for community stability. It was a way for citizens to support one another and ensure their new towns and cities could endure. So, from ancient merchants dividing their cargo, to Londoners rebuilding from a fire, to Ben Franklin fostering community strength, the story of insurance isn't really about money. It's about people. It's about our long-standing, deeply human instinct to band together and create a safety net so that when one of us stumbles, the whole community is there to help us get back up. So for our call to action this segment, I want you to think small and local. Think about one informal way you and your community already share risk. Maybe it's a carpool you have with other parents to get kids to school. Maybe it's watching a neighbor's pet when they're out of town, or a group of you helping someone clean up their yard after a big storm. These are all mini insurance policies built on trust and mutual support. Just take a moment to notice one this week. We're now tackling the big question. How does insurance actually work? We're going to demystify the machine behind the curtain and give you a beginner's guide to premiums, policies, and that all-important peace of mind. It can feel intimidating, but I promise the core idea is surprisingly simple. At its heart, the entire insurance industry runs on one core mechanic, the principle of pooled risk. Imagine you and everyone in your neighborhood decide to create a just-in-case fund. Everyone chips in, say $20 a month. That money just sits there in a big digital pot. Then one day, a neighbor's water heater bursts and floods their basement. It's a mess, and the repair bill is a staggering $10,000. Instead of them facing that devastating cost all alone, the community fund pays for it. That's it. That's the basic engine of insurance. Many people pay a small amount to create a huge financial safety net that can pay for the unexpected and hopefully rare, large losses of a few members. When you pause and think about it, how does understanding the concept of a pool of money help clarify why insurance companies can cover such large claims? It's because they aren't using just your money, they're using the collective power of the whole group. This system allows you to transfer the risk of a catastrophic financial loss to a company for a predictable fee. That fee, the $20 in our neighborhood example, is known as a premium. You are essentially paying the insurance company to take that giant, scary, unknown financial risk off of your shoulders. Think about your car insurance. You might pay, let's say, $150 a month. That's a predictable cost you can build into your budget. But if you get into a major accident, the cost to replace your car and cover any damages could be $30,000, $40,000, or even more. By paying that premium, you've swapped a potentially life-altering financial disaster for a manageable, known expense. It's one of the most powerful tools for insurance planning because it creates predictability in an unpredictable world. Okay, so now that we know how it works, let's talk about the types of insurance that form the foundation of protection for most families. While there are policies for everything you can imagine, most family planners should have a basic understanding of these four categories. First, there's life insurance. This is for your loved ones. If you're no longer around to provide for them, it provides money to replace your income, pay off the mortgage, and secure their future. Second is health insurance. This is the one most of us are familiar with. It helps cover the costs of doctors, hospitals, and prescriptions when you or a family member gets sick or injured. Third, we have property and casualty insurance. This is just a formal name for insurance that protects your stuff. It's your homeowner's or renter's policy that protects your home and belongings, and your auto policy that protects your car. And finally, number 4 is disability insurance. Honestly, this is the one that's so often overlooked, but it is incredibly critical. It protects your single greatest asset, your ability to earn an income. If you get too sick or injured to work for an extended period, this insurance replaces a portion of your paycheck so you can keep paying the bills. So just take a second to reflect on those. Looking at the 4 main types of insurance, life, health, property, and disability, which one feels most critical for you to understand at your current life stage and why? For a new parent, it might be life insurance. For a self-employed person, disability might be top of mind. There's no wrong answer, but knowing your priority is the first step. While the industry can feel complex, its mission is beautifully simple: to provide peace of mind. The whole purpose of how insurance works is to answer that nagging question in the back of your mind: what if? What if I get really sick? What if our house is damaged in a storm? What if I can't provide for my family anymore? Insurance is the plan that lets you sleep a little better at night. It's the sturdy shell on our friend, Shelby the trustworthy tortoise, protecting all the hard work you've put in. So, to quickly recap, insurance works by pooling the risk of many to cover the large, unexpected losses of a few. You pay a small, predictable premium to transfer a huge, unpredictable risk. And the four main types, life, health, property, and disability, are all designed to protect different parts of your life, ultimately building that financial safety net that gives you peace of mind. Now, for this segment's simple, actionable step, your call to action is this: do a quick inventory of the insurance policies you may already have. Pull up your benefits from work, look at your auto policy declaration page. Just make a list. You don't have to understand every detail yet. The goal is simply to get a baseline, to see what shields you already have in place. Once you have that baseline, you can start asking the right questions about what it all means for your future. And that's exactly where we're headed next segment. We're going to reframe the entire conversation. We're talking about protecting your assets, building your legacy, insurance planning for your future. This is where we stop seeing insurance as just a monthly expense and start seeing it for what it truly is: a proactive tool for building the life you want with confidence. So let's start with our first big mindset shift. Most of us think of insurance like a fire extinguisher hanging on the wall. It's there for an emergency, but you really hope you never have to touch it. I want you to throw that image away. Instead, I want you to think of proper insurance as the concrete foundation of your financial house. You can't confidently build the second or third story, invest your money, save for that big goal, maybe even start a business, if you're secretly worried the whole ground floor could collapse from one bad storm. This is how insurance becomes a tool to develop wealth. By securing your foundation, you're not playing defense. You're giving yourself the freedom and the confidence to play offense with your financial goals. And that strong foundation supports something incredibly meaningful: your legacy. Now, when I say the phrase lasting legacy, what comes to mind? For most of us, it's not about giant statues or buildings with our names on them. It's more personal. It's about the opportunities you want to provide for your family. It's ensuring your kids can go to college without crushing debt, or that your partner can stay in the home you chose together, no matter what happens. Your hard work and your income are what's paving that road for them. Insurance is simply the guardrail on that road. It ensures that one single unexpected event, a serious illness, or a tragic accident, doesn't derail the entire journey for the people you love. So just take a second to reflect on this. What does the idea of a lasting legacy mean to you, and how does protecting your income and assets fit into that personal vision? Of course, a legacy isn't built in a day, and our lives definitely don't stand still. This brings me to a point that is absolutely critical for long-term success: the need to embrace financial flexibility. Your insurance coverage is not a set-it-and-forget-it purchase. It's more like a coat. The coat that fit you perfectly when you were single and renting an apartment is not going to work after you get married, buy a home, and have a child. Every time your life experiences a major change, a new job, a new baby, a new house, that's a signal to go back to the closet and check the fit of your insurance coat. It needs to grow and adapt right alongside you. And really, all of this, building wealth, protecting a legacy, staying flexible, it all boils down to one essential starting point: understanding insurance. That's it. That is the first step on a lifelong journey of responsible financial management. You don't have to become an expert overnight, but grasping the basics is what empowers you to ask the right questions and make confident choices. That knowledge transforms you from someone who worries about the what ifs to someone who is prepared for them. It gives you the power to ask yourself, beyond just preventing disaster, how can being properly insured empower me to pursue my long-term goals with more confidence? So to wrap this all up, Insurance isn't just defense, it's the foundation that allows you to proactively develop wealth. It's the guardrail that protects your lasting legacy. It's a living part of your plan that requires you to embrace financial flexibility. And it all starts with the confidence that comes from simply understanding insurance. Now, I want to leave you with one simple, practical action item. Don't worry, you don't have to do it today. Pull out your phone right now, open your calendar, and go 6 months into the future. I want you to schedule a 30-minute meeting with yourself. Call it Financial Check-in. In the notes for that event, just type this one question: has my life changed in a way that affects what I need to protect? That's it. It's a simple, recurring reminder that will help you practice that financial flexibility we just talked about. Taking small, simple steps like that is what building a safe, simple, and sound financial life is all about. And that brings us to the end of our deep dive into the world of insurance. We covered a lot of ground today, but it all comes back to a few simple, powerful ideas. We started by reframing our perspective, moving from seeing insurance as an expense to seeing it as your personal financial safety net, a shield to protect what you've worked so hard for. We saw that this idea isn't new. It's an ancient, community-based concept that even Ben Franklin championed. Then we peeled back the curtain on how insurance works, demystifying that core principle of pooled risk. And most importantly, we connected it all back to your future, showing how solid insurance planning is not just about defense, but about actively protecting your ability to build a lasting legacy. For me, the most powerful shift is thinking about that simple question: what if? Understanding the answer is the first step to true peace of mind. It's the foundation for answering the bigger question of what is insurance for your specific life. I know this can be a big topic, especially if you're looking at insurance for beginners. But remember our friend Shelby the tortoise. It's about taking slow, steady, and strong steps to build that protective shell. So here's your call to action from today's episode. Take just 5 minutes this week. Grab a piece of paper or open a note on your phone and list the people, the assets, and the income that are most important for you to protect. That simple list is the starting point for your entire plan. Thank you so much for tuning in and being a part of the Safe, Simple, Sound community. I truly appreciate you spending your time with me. For links to the article we talked about and other resources, be sure to check out our show notes. And if this episode helped clarify things for you, please subscribe so you don't miss our next one. And maybe share it with a friend or family member who's also starting their financial journey. Until next time, stay safe, be empowered, and keep your planning simple and sound. This is Alex signing off.